All right, so you want to know about diversification in investing, right?
Ah, yeah.
It's like one of those things like every financial expert talks about, but like actually understanding it can really have a big impact on how your investments perform.
Right.
So you sent me this YouTube video, main sectors of portfolio diversification, why it's important explained. It's by Passive Income Investing, and they promise a like pretty thorough explanation.
Yeah.
And I have a feeling they're going to say something about not putting all your eggs in one basket.
Yeah, definitely.
Like you wouldn't want your entire retirement plan to be like hinging on one company's success, right?
Exactly. That's a great analogy. And that's exactly what they talk about right off the bat. It's
Yeah.
all about managing risk.
Mm-hmm.
Investopedia defines it as a risk management strategy that mixes a wide variety of investments within a portfolio.
Okay.
So instead of like betting everything on, one hot stock tip, you're spreading out your investments.
Okay, so that makes sense. But like, how do you actually do that? How do you spread those investments out? Like, what are the different ways you can do that?
Well, the video, it breaks down diversification into three main branches.
Yeah.
You've got sector diversification, asset class diversification, and region diversification.
Okay.
And they start by talking about sector diversification. So maybe we could start there as well.
Okay. Sectors. I mean, I,
Yes.
I know a little bit about this, but like, why is that so important in today's market?
Well, just think about it. Like, what happens when an entire industry, takes a hit?
Mm-hmm.
Like, think back to the dot-com bubble burst. If you were heavily invested in tech,
Yeah.
you probably weren't feeling too good.
Yeah.
So sector diversification, it helps protect you from those like industry-specific shocks.
So instead of like going all in on tech or whatever it might be, you
Yeah.
should be thinking about spreading my investments across healthcare, energy, consumer goods, and even like something I haven't even thought about.
Yeah. The video actually lists 11 sectors. So there's energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, utilities, and real estate.
Hmm.
But we don't need to go through all of them.
No, we don't need like a roll call of all of them.
Mhm.
Maybe we can like pick a few diverse sectors and get into the weeds a little bit. I'm kind of curious about energy, especially with all the talk about renewable energy and the volatility we've seen in oil and gas prices.
Yeah, that's a great one. Energy is a particularly interesting sector right now.
Yeah.
Especially given its connection to global events and the shift towards more sustainable practices. The video focuses on the more traditional oil and gas side of things.
Right.
Like they talk about ExxonMobil and how those companies can see their stock prices fluctuate wildly based on what's happening with global commodity prices.
Yeah, so that's pretty risky, right? Especially if you're like not into those big swings.
Yeah.
Sure. So, what are some ways to like reduce risk but like within that sector?
Well, the video talks about midstream companies,
Yeah.
like Enbridge, which focus on transporting and processing oil and gas.
Okay.
So they're not actually doing the drilling or refining.
Right.
They're a bit removed from the dramatic price fluctuations.
So a midstream company could be like a good option for someone who's like interested in that sector but doesn't want to be on that roller coaster ride of oil prices.
Exactly.
Okay, cool. So we've got energy. What about like something totally different? Something that's like traditionally considered more stable, even in like a downturn in the economy.
Well, they talk about consumer staples in the video,
Okay.
and that includes companies that provide those essential goods and services, things that people always need, regardless of what's going on in the economy, like groceries, household products, things like that,
Right.
like Coca-Cola, or even just your local supermarket chain.
Yeah, even in a recession, people still need to eat and drink.
Yeah.
So it's kind of like investing in the basic needs of humanity.
Yeah, exactly. And the video compares that with consumer discretionary, which are things like travel and entertainment, like the first things people cut back on when money gets tight.
Right. So if you're looking for something that's going to hold steady even when times are tough,
Yeah.
consumer staples is a good place to start. But if you think the economy is going to do well, maybe consumer discretionary is a better bet.
Right. Each sector has its own risk profile,
Mm-hmm.
and diversification is about balancing those factors to match your own personal investment goals.
So it's not just picking random stocks. It's like
Yeah.
understanding those bigger forces.
Yeah, exactly. And another sector the video mentions is healthcare.
Ah, healthcare. Yeah, people are always going to need that no matter what the stock market's doing. So is that like a safe investment?
Well, the video says healthcare, along with utilities, are often considered defensive sectors
Okay.
because demand for them stays relatively stable even when the economy is doing poorly.
Right.
But safe doesn't necessarily mean guaranteed returns.
Right, of course. But it sounds like they could be good options for someone who's like, seeking more stability or maybe looking for that steady income from dividends.
Yeah, a lot of healthcare companies are known for their reliable dividend payouts.
Hmm. Speaking of dividends, the video also mentions financials. Are those generally good dividend payers?
Yeah, for the most part.
Okay.
But they point out that they can be really vulnerable during economic downturns, like what happened in 2008.
Right. High reward, high risk.
Exactly.
So if you're looking at financials, you have to think about that carefully. Wow, we've already talked about energy, consumer staples, consumer discretionary, healthcare, and financials, and we haven't even touched on the other 6 sectors.
I know, right.
Maybe we can circle back to those later. I'm also kind of curious about those other 2 branches of diversification, asset class and region.
Yeah, definitely. They add even more layers to the whole risk management strategy.
Oh, yeah?
The video talks about asset class diversification next, so maybe we can dive into that.
Okay, asset class diversification. So that's about going beyond just stocks, right?
Right.
What are some of those other asset classes that we should be thinking about?
They break it down into 4 main categories. You've got equities, fixed income, alternative investments, and cash equivalents.
Okay, so equities, I'm assuming, are just stocks.
Yeah, exactly. It's basically owning a small piece of a company.
Okay.
But there's more to the world of investments than just owning parts of companies. That's where those other asset classes come in.
Okay, cool. So what about fixed income? Is that like as boring as it sounds?
No, not necessarily.
Okay.
Fixed income primarily refers to bonds. And you can think of bonds as lending money to a government or corporation, and in exchange, they pay you interest.
So it's like an IOU that pays you interest.
Yeah, pretty much. They're considered less risky than stocks.
Okay.
But you also tend to get lower returns.
It's like the tortoise and the hare, right? Stops are the hare, they can be really fast, but maybe they get sidetracked.
Right.
And bonds are like the tortoise, slow and steady wins the race.
Exactly. That's a great way to put it.
Okay, so we got equities and fixed income. What about those other 2? Alternative investments and cash equivalents.
So alternative investments are things like real estate, precious metals, and commodities.
Okay.
They don't always behave the same way as traditional stocks and bonds.
Right.
So they can add another layer of diversification.
So those are like a little bit more adventurous?
They can be.
Okay.
They often have unique risk and return characteristics that can be good in certain market conditions.
Okay.
And then finally, there's cash equivalents. Those are the most conservative asset class.
Mm-hmm.
Think of things like savings accounts, money market funds, and short-term certificates of deposit.
Okay. So that's like the emergency fund of your investments.
Right.
Not going to grow a lot, but it's always there when you need it. So this is all making sense.
Okay.
So I can spread my investments across these different asset classes,
Yeah.
and that creates this balanced portfolio that can weather a wider range of economic conditions. It's like having a diversified team, right? Each player with their own strengths and weaknesses.
Yeah, that's a great analogy. And speaking of diversifying your team, they also talk about region diversification.
Okay.
And that's spreading your investments across different countries and regions.
Right, because the U.S. economy isn't the only one. So what are some of the benefits of diversifying geographically?
It's the same as not putting all your eggs in one basket, right?
Right.
You wouldn't want your entire retirement plan riding on one company.
Yeah,
So you don't want to tie it all to one country's economy either.
that's true, yeah.
Every country has its own, economic cycles and political risks, as well as growth potential.
Right.
So by diversifying geographically, you're reducing your exposure to any one country's ups and downs.
That makes sense.
Yeah.
Okay, so instead of just investing in, U.S. companies, I could consider Europe, Asia, and other parts of the world. But wouldn't investing in like foreign markets have its own set of challenges?
Yeah, for sure.
I mean, I barely understand like the U.S. stock market, let alone what's happening in some emerging markets halfway across the world.
Yeah, you're right. There are more complexities with investing in foreign markets, like currency fluctuations and potentially less transparency.
Right.
It's definitely important to do your research and understand the risks involved.
Right.
But maybe that's a conversation for another time.
Okay.
The main takeaway is that region diversification adds yet another layer to your risk management strategy.
Okay, cool. So this has been like a whirlwind tour of diversification.
Yeah.
We covered the 3 main branches: sector, asset class, and region, and I'm kind of starting to see how they fit together.
Yeah, each branch plays a critical role in building a strong portfolio that can handle market volatility and helps you meet those long-term goals.
Awesome. Okay. So We laid a great foundation with these three branches of diversification.
Right.
But I want to go deeper on each one.
Sure.
Where should we dive in next?
Let's go back to sector diversification
Yep.
and explore those other 6 sectors that we skipped over.
Okay. And then we can talk about some real-world examples.
Yeah, for sure. Like how to use these concepts to actually build a diversified portfolio.
Okay, perfect. We'll be back in a flash to continue our deep dive into diversification.
All right, so we're back, ready to keep diving into this diversification thing.
Yeah, sounds good.
In part 1, we tackled those 3 main branches, sector, asset class, and region.
Mm-hmm.
Now I'm kind of ready to explore those other sectors we skipped over
Yeah.
and get a better sense of how they all, fit into a diversified portfolio.
Yeah, it's like we're building this diversified investment menu,
Okay.
carefully selecting items from different categories
Right.
to create a well-balanced meal.
I like that. Okay, so we already talked about energy, consumer staples, consumer discretionary, healthcare, and financials. So that leaves us with materials, industrials, information technology, communication services, utilities, and real estate.
That's right.
So where should we start? Well, the video briefly touches on information technology, or IT.
Okay.
That sector has been on everyone's radar for the past few decades.
For sure.
Noting that those companies tend to be more focused on growth and innovation
Okay.
rather than paying dividends.
Yeah, IT is definitely known for that high growth potential, but it can be pretty volatile, right?
Oh, yeah. It's not exactly a sleep well at night sector.
Definitely not.
It tends to attract investors who have a higher risk tolerance and a longer time horizon.
Okay.
But even within IT, there are ways to manage risk through diversification.
Oh, okay, so how do you do that? I mean, aren't all tech companies kind of doing the same thing?
Well, not really.
Okay.
There are different subsectors within IT, each with their own dynamics and risk profiles.
Okay.
You've got software companies, hardware manufacturers, semiconductor producers, cloud computing providers, e-commerce platforms. I mean, I could go on.
Wow.
So by diversifying across those subsectors, you're spreading your risk and potentially capturing growth from those different areas.
Mm-hmm. So it's like diversifying within the diversification?
Exactly.
Okay, so instead of just buying a few big tech companies, I could spread it out
Right.
across smaller, more specialized companies, or even like ETFs that track specific subsectors.
Exactly. That way, if one area of the tech sector takes a hit, you're not completely sunk.
Okay, that makes sense. So IT check. What about materials? I'll admit that one's kind of mystery to me.
Yeah, so materials companies, they produce and supply raw materials.
Okay.
Things like metals, chemicals, timber, that sort of thing.
Okay.
Think of companies that mine gold or extract oil, harvest lumber.
Okay.
Their performance is often tied to the prices of those commodities,
Mm-hmm.
which, can be influenced by global supply and demand.
So investing in materials is kind of like betting on the raw ingredients of the global economy.
Yeah, kind of.
And that seems like it could be pretty volatile, right?
It definitely can be.
Okay.
Commodity prices are known for being cyclical,
Right.
influenced by things like economic growth,
Yeah.
geopolitical events, even weather patterns. But, for investors who are comfortable with that volatility
Right.
and understand those commodity markets, materials can have a pretty good potential for returns.
Okay. Definitely not for the faint of heart,
Right.
but a good diversifier for the people who know what they're doing.
Yeah.
Okay, moving on. We've got industrials. What does that include?
Industrials is a broad category. It includes companies in manufacturing, construction, aerospace, all sorts of industrial activities.
Okay.
Companies that build airplanes, make machinery, or build infrastructure.
So industrials are kind of the backbone of the economy.
Yeah, you could say that. They make things happen.
So what about their risk profile?
Well, they tend to be cyclical, meaning they do well when the economy is good,
Okay.
but they struggle when there's a recession or slow growth.
Yeah, that makes sense because when businesses and governments cut back on spending, it's those companies that feel it first.
Exactly.
Okay, so industrials are definitely a sector where you need to think about the overall economy. Okay, cool. So now let's move on to communication services.
Okay.
It's a sector that's become more and more important, in our digital age.
Yeah, it's way more than just your old phone company these days.
You could
It's
say.
everything from telecommunications to media and entertainment to internet services,
Wow, okay.
like companies that provide cell phone service, cable TV, streaming, social media, even online advertising.
So basically all the